Okay, folks, welcome to the week ahead commentary for the new trading week. This is where we talk about the closing price action of the major averages. We'll talk about positions and we'll talk about strategy. If you're watching this on YouTube clips, think about becoming a 14-day free trial offer member. Get the whole full video version, and hopefully we'll see you on the other side. On Monday, I published this commentary about the NASDAQ 100, and let me give you a quick playthrough here. Just a little bit of commentary about what I think is going to happen in the coming days. And I think that what we're going to get is a rally in the NASDAQ 100 names. Okay, so here's the chart of the triple Qs. And ultimately, we did get the rally. And they tried to break it out today here above this upper band of resistance. And of course, above what was prior support here has now become resistance. This white line is now resistance. It was prior support. So it was a failed breakout on the triple Qs. Now, for all I know, on Monday morning, they're going to pop us back up above this upper band of resistance. But a couple of things were bothering me about the market in addition to the price action of the major averages. One, the US dollar. We'll go over that chart in a minute. Two, bonds and bond yields. We'll go over those charts in a moment as well. Those to me are far more important than the price action individually of the triple Q names. Because as yields begin to press up higher, and they are going up higher, because when we go to the weekly chart of the 10-year yield in a few minutes, it's going to be hard to argue a reason as to why we should be buying stocks right now, especially when 59% of companies reporting current are beating on revenues. That's below historical trend. And while, yes, it's early in the earnings season, some of the most profitable names have already reported. So with yields moving up higher, the dollar moving up higher, a PE multiple as of last night on the Shiller PE ratio of 37, the argument for buying stocks is difficult. Unless, of course, they're value stocks, they're beaten up, like we were buying Boeing. It's beaten up, all the bad news is in there. I think that you can't get much more bad news coming out of Boeing. But today, to me, was, while we didn't have a headline event that shook the market, the volatility index, the VIX index, was high all day long. And when rallies fade, I get very, very nervous. So after the close, I was scrolling through the Twitter and I ran across a couple of headlines. I don't spend much time during the day looking at news because it tends to influence you, and I don't want to be influenced. I have notifications that'll pop up on really important stuff. But other than that, I do not listen to CNBC or Fox News, none of that stuff. They take parking space up in your head and you make bad decisions. So after hours, I was taking a look at Twitter and I found this very interesting. China makes it very clear that its main weapon in response to more Trump tariffs is large upfront yuan depreciation. Now, I'm going to take you back to the first week of August. Remember that big spike up in volatility that we had? What was that? Why did that happen? Well, the yen carry trade came unwound. So this is another threat of a unwinding of the yen carry trade. If Trump wins, yen carry trade isn't heading to 120 but to 200. That's a huge, huge move. And he's promising to enact these tariffs. It's not as if it's a suspicion. It's a foregone conclusion. So there are times where I just get the gut feeling that, you know what, you may not have a big profit, but you have a profit, make it real, move to the sidelines. The tape action is just not looking good. And we had a good week. We booked profits this week on soybeans, gold mining stocks, half position. We're still long in that half position. Oil, we did today. Tesla, we did today. We shorted Tesla, made some money. IGV, that was a software ETF we spoke about a few weeks ago. I booked profits there because I just don't like the price action. Add to that, we had the rip up higher in palladium up and into the third standard deviation Bollinger Band in red. It was time to ring the bell. We also have resistance immediately above. Let me show you that so you can see right there. So we got out near the top. Now, I think that this ultimately is going to go up higher, but we need a correction. We need a reversion to the mean, because when you go to the weekly chart of palladium, this bad boy is in fuego. So on any pullback, we'll look to reestablish. I think we're cutting off exports to Russia of palladium. I had no idea we were still doing trade with Russia. But okay, so we book profits, and we're sitting on a good pile of cash now, and we added to shorts today of the triple Qs. Now, we sold our position, again, small profit on Valley National Bank. I didn't like the price action. Let's take a quick peek at the KRE, the regional bank ETF, and look at this. Lower highs, outside reversal bar on the day. This is not a buy, this is a sell. So VLY, which is of course a regional bank, which had a great day yesterday, no follow through today. So I saw the price action on the regional bank ETF as first out, best out. It wasn't a big profit, but it was a profit nonetheless. It could have easily turned to a loss had we not acted on the day. Now back to this Twitter post. And New York Community Bank, this is a bank I spoke about a few weeks ago about when we were talking about Valley National Bank. I chose Valley over NYCB. And this is why I don't like carrying stocks into earnings. This stock fell 40% on earnings. This is the bank that acquired Signature Bank. So now that I'm looking at these headlines after hours on a Friday afternoon, I'm feeling pretty comfortable with having raised capital today and just sitting in a pile of cash. Now, the 10-year yield, it broke out this week, and it didn't just break out. It didn't just barely nudge above a resistance level. No. It closed right off the highs of the week. That is a major concern. So why do bond yields matter? I hope you enjoyed the clip from the Week Ahead Commentary. For the full-length video version, sign up for our 14-day free trial offer. Use that link below, and you'll hear about my strategy going into the new trading week, what my thoughts are on the markets, and how we are positioned moving into the next trading week. We do not wait until Monday to develop our strategy. Our strategy is developed by the end of business on Saturday. So join us here. 14-day free trial offer. Help support the channel. Thank you for being here, and have an awesome weekend. Be well.